The best performing stock in the S&P 500 in 2024 wasn't Nvidia or Tesla or any other Magnificent Seven stock. It was Palantir. Shares of the defense software firm surged 340% last year thanks to robust growth in the company's government and commercial business segments. That price performance was roughly double that of stock market darling Nvidia and far outpaced legacy defense companies like Lockheed Martin and Raytheon, now known as RTX. And Wall Street remains bullish on Palantir's growth outlook as new customers continue to sign up for the company's portfolio of artificial intelligence products. The meteoric rise of Palantir also represents a broader shift in the U.S. defense industry. Software has become a key differentiator in national security and military defense strategies. But while the data analytics firm is seeing notable success, it faces growing challenges on multiple fronts. Legacy defense contractors are working to defend their turf, while tech startups are looking to move into the market the way Palantir did. On this episode of Growth Stories, we take a look at Palantir's plans to redefine the military-industrial complex and how defense companies are maneuvering to stay competitive in the age of artificial intelligence. On September 9th, 2024, Palantir CEO Alex Karp emerged from the woods, hot pink ski poles in hand, to deliver a message to his employees and shareholders.
I don't know any other occasion like this where the rebels actually got inside the gate and helped the institutions transform themselves. And while it's maybe not the most important thing, I am really, really, really happy.
Karp was so bleepin' happy because the S&P 500 had announced that Palantir would join the benchmark index. It was a major milestone and mark of legitimacy for a company that has often felt misunderstood by Wall Street for its unconventional approach to business.
They do not comprehend how we could have turned a switch and gone to GAAP profitability and gone from what adults, professional managers, and some analysts thought was a Frankenstein monster powered by a freak show leader, me, to a dynamic, clearly profitable company worthy of and admitted to the S&P 500.
Palantir is not only profitable, but Karp sees the company as a juggernaut in the software space. The defense tech firm handily beat fourth quarter earnings estimates thanks to the strength in its U.S. government and commercial businesses, and has notched 6 quarters of accelerating revenue growth. Palantir's inclusion into the S&P 500 was also notable for another reason. It was the first defense company to be added to the index in 46 years. The AI software firm, which gets its name from a crystal ball in The Lord of the Rings, got its start over 2 decades ago working with U.S. intelligence and defense agencies to tackle terrorism in the post-9/11 landscape. Today, Palantir draws clients for its decision-making software from a broad range of industries. The business is centered around several core products: Palantir Gotham for defense, Palantir Foundry for enterprise, Palantir Apollo for software management and deployment, and the Palantir Artificial Intelligence Platform, or AIP, which is the company's large language model. The software driving the AI revolution isn't just reshaping the tech sector, it's also providing an edge on the battlefield.
There's an old saying that software is going to eat the world, and software is most certainly eating not just the US military, but militaries around the world.
That's Byron Callan, managing director at Capital Alpha Partners. He says the ongoing war in Ukraine offers a glimpse of how that technology is remaking modern warfare.
First is just the widespread use of drones, autonomous systems that are cheap. Some of them are commercial off the shelf, but they're more sophisticated ones.
Callan adds that rapid scalability and battlefield transparency through overhead surveillance have also emerged as key themes in modern warfare.
You've seen this pressure on the U.S., Western European, allied defense industries to scale, but, using processes that are kind of industrial age and not necessarily akin to this type of warfare.
One of the challenges of getting the latest technology to warfighters has been federal bureaucracy.
More and more, DoD is realizing that a high moat has kept technology out of the department, so they're trying to find ways to build bridges across the moat.
Part of that bridge building includes sweeping modernization efforts to scale adoption of AI and other digital technologies. Those lower barriers to entry could provide a tailwind for Palantir and other aspiring defense entrants.
Palantir is here to disrupt and make the institutions we partner with the very best in the world. And when it's necessary to scare enemies and on occasion kill them.
Karp views that disruption not only as the key to scaling Palantir's business, but also as a moral imperative to help the US and its allies retain their global edge.
I think Palantir is an exemplar or a model of a modern major defense company in as much as its core competence is in software, unabashedly.
That's Steve Grunman, an executive in residence at Renaissance Strategic Advisors and a senior fellow at the Atlantic Council, a foreign and defense policy think tank in Washington. He says software is quickly becoming a distinguishing advantage in military programs. That evolution could shake up the defense industrial base by making room for more tech entrants in a field that has traditionally been dominated by just a handful of companies.
There will be room in this industry and arguably at the top of the food chain for software intensive companies.
But Palantir doesn't want to just be at the top of the food chain when it comes to the defense sector. It wants to remake the entire industry in its image.
We are at the way beginning of revolution, and we plan to be a cornerstone, if not the cornerstone company in driving this revolution in the U.S. over the next 3 to 5 years.
That revolution is based on bringing commercial innovation back to the defense sector. While Palantir gets roughly 55% of its revenue from government agencies, the company is also focused on growing its commercial market with expansions into healthcare, energy, and manufacturing. Most traditional defense primes, as DoD contractors are referred to, do not have commercial businesses. This distinction is a key talking point in a recent thesis published by the company called the Defense Reformation, which skewered the Department of Defense for allowing stagnancy to erode America's military edge in production. The roots of that stagnation were planted in 1993, according to Palantir, when then Secretary of Defense Les Aspin, who was eager to cash in on the peace dividend from the end of the Cold War, gathered the heads of the major defense primes for a dinner at the Pentagon. The message was simple. The agency was slashing spending, but not all of the companies would survive. Consolidation became the name of the game. The sector whittled down from 51 defense primes in 1993 to just 5 today.
Again, nothing in the Pentagon changes on a dime, but at the margin, it's evolving interest in the digitalization of its systems and the willingness of often quite literally Silicon Valley or maybe figuratively Silicon Valley type players to participate in this industry. It will get better, quicker, cheaper solutions to its problems, which in a nutshell is really what the imperative in acquisition management at the Pentagon is today. Better, quicker, cheaper.
Palantir has effectively mined the AI opportunity with government customers for intelligence gathering, counterterrorism, and military purposes. And the second half of 2024 saw the data analytics firm rack up some major wins. In early December, the federal government gave Palantir a higher rating for secure cloud computing services and extended a software contract with the U.S. Army to the tune of $400 million over the next 4 years. Palantir also announced partnerships with defense contractors L3Harris and Booz Allen Hamilton to speed up modernization efforts for warfighting operations. But analyst projections for decelerating revenue growth over the next year is a potential concern for Palantir, and some on Wall Street think the stock is overvalued. Another contingent of the investing community views Palantir's technology powering the surveillance state as a liability, with some even going as far as calling the company wildly unethical in the big tobacco of the tech world. But Palantir CEO Alex Karp is undeterred by the criticism.
No other company in the world has that kind of access like Palantir, and that's why we're completely uniquely positioned to do this. And luckily for the world, we're very long America, and we're doing it primarily here because it's powerful as
Palantir hasn't been the only tech upstart to break through the complicated Pentagon procurement process. Privately backed companies like SpaceX and Anduril, which specializes in drones and autonomous systems, have also become integral to the makeup of the defense sector. And tech stalwarts like Amazon and Microsoft-backed OpenAI have inked their own deals with the federal government. But Palantir's chief technology officer, Shyam Sankar, doesn't seem all too concerned with the growing competitive field.
Palantir's real competition is a lack of accountability in government. These forever software projects that cost an insane amount, that don't actually deliver results. They're sacred cows of the deep state.
Palantir executives trumpeted an optimistic take on Trump's efforts to cut government waste on the company's fourth quarter earnings call in February. But shares have recently come under pressure thanks to proposed budget cuts that would see Department of Defense spending decrease by 8% annually over the next 5 years. Alex Karp views the fiscal belt tightening as an opportunity and says the company is uniquely positioned to benefit from a tidal wave of federal spending on artificial intelligence. Here's Karp at the Economic Club of New York in February.
The single best thing that helps my company is meritocracy. Pen test everything. Yeah, I don't know. We have hundreds of contracts. Maybe, I don't know, maybe there's a contract that doesn't deserve to be renewed. Great. Maybe there's a contract that does deserve to be renewed that gets canceled. Pen test everything.
While Palantirians want to remake the defense sector, traditional defense companies will still play a major role in the market. The war in Ukraine and rising geopolitical tensions in China and the Middle East have not just been good for Palantir and other defense tech startups, but have pushed the share values of defense legacy giants higher as well.
At the margin, some of these defense tech companies are taking share away from some of the traditional primes. The large contractors are still going to be here. I mean, no one is going to figure out a way to give a small tech company the ability to build a nuclear-powered attack submarine or a surface combatant or a major manned aircraft.
That's Capital Alpha analyst Byron Callan again. He says that while the competitive field is evolving, incumbent defense companies will still control a large portion of the marketplace.
I think the real question is, what are their growth rates going to be? How are their capital allocation strategies going to change?
One thing that may change is how primes manage cash to stay competitive. Defense stocks typically appeal to risk-averse investors who like reliable dividends and increased value from share repurchases. Pure-play defense names typically have the luxury of utilizing shareholder-friendly cash deployment strategies because they don't have to put their own money into research and development. Since December 2019, the 5 major defense primes have completed 71 stock repurchases worth $59.59 billion, according to data from FactSet. Defense contractors' penchant for buybacks has drawn ire from the DoD for years. But aside from griping, Callan says the agency can't really tell defense primes how to run their businesses.
They might be able to award more work to some of these smaller companies that are investing, that are scaling, that are investing ahead of need, and can deliver at a faster pace than some of the larger primes.
But market forces could be a natural solution. The continued success of tech upstarts like Palantir and Anduril may pressure defense companies to invest more cash in tech development to remain competitive.
And at the margin, over time, your viewers are going to see more of these traditional incumbent companies, defense pure play companies that had been able to afford very shareholder-friendly cash deployment strategies, having to put more investment up front in order to remain competitive with the entrants in the market.
That's defense policy expert Steve Grunman again. He says one way defense primes are trying to innovate is by investing in new technology through venture capital funds.
These incumbent companies, almost all of them, but maybe most notably Lockheed Martin, Boeing, have undertaken corporate venture investing themselves. These are sophisticated companies. They do not have their heads in the sand. They see what's going on.
Rising geopolitical tensions, combined with what many expect to be a more business-friendly environment under Trump, has sent venture capital funds flowing into the defense sector. Funding to VC-backed defense startups hit $3 billion in 2024, according to data from Crunchbase. That's an 11% increase over the previous year. That trend is also translating to the global market. Venture capital investment in European defense startups rose 24% in 2024 to $5.2 billion, according to figures from the NATO Innovation Fund and Dealroom.
They are trying to get with this program. And yes, changing the way maybe not the company itself is capitalized, but the way perhaps its projects or its technology management systems are capitalized is one of those changes.
Grunman adds that if consolidation was a defining feature of the sector post-Cold War, the key trend now is diversification.
There will be a greater diversity of companies, depending on how you count them, among the big defense contractors.
Callan says that diversification will also show up in the number of companies outside the U.S. competing in the sector.
There is going to be more international competition in this field. We focus on the United States, but I'm intrigued to see companies like Hanwha in Korea, making a larger stand in the United States.
That stand is happening. In 2024, South Korea's shipbuilding giant Hanwha completed a $100 million deal to take over a Philadelphia shipyard. And the U.S. arm of the German auto and arms manufacturer Rheinmetall is squaring off with General Dynamics to build the Army's next generation of Bradley fighting vehicles. But Palantir isn't sitting on the sidelines. In December 2024, it was reported that the defense tech firm, along with Anduril, were in talks with a dozen competitors to form a consortium that would jointly bid for government contracts to break the grip of the legacy prime contractors. Here's Palantir CEO Alex Karp speaking to CNBC's Money Movers.
What makes America unique is that we have a culture of builders expressed in technology. And the more builders that are helping the US government be stronger and better and superior to all other governments in the world, the better for everyone.
So what will a successful defense company look like in the modern era?
I suppose the ideal company is one that can kind of balance these competing demands from employees, customers, and owners, shareholders. There's got to be a little bit more risk-taking, maybe a little bit more kind of anticipating what customers will need, not necessarily waiting for the Department of Defense to issue a requirement. Having said that, I'm sure there are going to be some owners, private equity in particular, who might be very happy to see a conservative strategy to manage cash flow and just pay down debt, and that's the way they'll create values.
Grunman identifies capital deployment as an important watch item for investors.
Different companies will adopt different strategies and ultimately business models through which to respond to this perturbation in the industry, this inflection point. But I think on balance, more of them are going to have to invest relatively more money into remaining competitive and on time. And so being there, being ready, having a technology readiness level that is ready to move quickly into production will be something that can differentiate these firms.